Hello everyone, the market was being very cheeky today. We started the day off red. I only took 3 trades to start the morning. At around 11:30, 12 o'clock I stopped trading. Came back around 2 o'clock, 2 p.m. Eastern time. We took 6 trades in a row. All 6 of them ended up being green. And yeah, I'm not going to end the day red, so it is what it is. So I shared the exact entry and exit point for every single trade that I took. Whether you like it or not, these are the results. So if you want access to every single one of these buy and sell points, I don't claim perfection, but I share my results as they occur, and it is what it is. Not every trade is going to work, but today, regardless, it was a 7 for 9 day, and things worked out pretty well. So once again, if you guys want access, the link to join is down below. Let's get started with the rest of the video. Thank you. All right, so you guys basically knew that I was talking about how the loser tech stocks would need to pick up the slack while AMD and NVDA would either stagnate or pull back. That's basically exactly what ended up happening today. So before we go into the rest of the tech stocks and everything, let's first contextualize what's going on with the market by looking at the dollar, the VIX, and the bonds. All right. So first and foremost, let's take a look at 30-year bonds. And we're sitting at support. The bonds are important because they have a correlated relationship to the market, generally. If the bonds are going up, the overall market is also going to go up. And with the bonds and the dollar, they work based off of levels of support and resistance. So, for example, because the bonds are holding this level of support, it's considered bullish, even though we could see clearly a red candle, right? But if the bonds ended up closing below this level of support, then this weakness would most likely translate into the overall market. So the bonds are still holding a bit of support. Let's look at the junk bonds. The junk bonds are still also holding support. They're bottoming out a bit. The junk bonds also have a correlated relationship as the 30-year bonds. Okay, so I hope that makes sense. And next, let's go ahead and take a look at the VIX. So the VIX is very important because it has an inverse relationship to the market. So if the VIX is doing well, that means the overall market should be falling. And we are continuing to hold $19 and $20 on the VIX, even as the market is making new all-time highs. So the stock market is making new all-time highs, and the VIX is still basically holding above major levels of support. This slight correlation, or this deviance in inverse correlation, is pretty damn interesting because this generally does not happen. If the market is this bullish, making new all-time highs, the VIX generally should break below like major levels of support. The fact that that's not happening is pretty interesting. And it's also interesting to look at the dollar. The dollar, very similar to the bonds. So the dollar is inverse to the market as well. If the dollar is doing well, then the overall market should not be doing well. Sorry about that. There we go. Okay. So we could see that the dollar had a big, strong green candle. It needs to break above major levels of resistance for this strength in the dollar, in my opinion. So once the dollar breaks above major resistance points, for example, the 103 level, once it breaks above this area, then that should be much more weak for the market. But right now, even though the dollar had a huge green candle, the market also went up. So it's the inverse correlation is not as clean because we are not breaking above levels of support or resistance. And that's basically what's going on for the dollar, the bonds, and the VIX. So now here is the fun stuff. I was explaining how there would be a rotation out of chips into the losers, into the stocks that have the best setups. So let's first take a look at the chips. Okay, so NVIDIA and AMD I was showing how they were both very overextended to the upside here. You can see that NVIDIA overextended to the upside. AMD also overextended to the upside. I said it would be a stupid trade to try to go long up here on AMD. If you remember, I said it would make way more sense to go long here, not up here after a major move already. So that's, precisely what ended up happening. We had a pullback on the chips. Now, I was saying that the chips needed to have a period of stagnation or a pullback, and the losers would help pull the market up. And that is exactly what ended up happening. Apple had a big green day today. It was one of the losers. It had a really bullish setup. I was pointing this out in yesterday's video. This is what ended up happening today. We shot up almost $5. Microsoft continued to move upwards today as well. It was one of the losers. Very beaten down. Now it's starting to break upwards. We're still having trouble at around 420. But this was a huge bounce. It bounced basically almost $14, $15 in the past 2 days. Tesla did not have too crazy of a day. It started closing low. Google also, not a great day for Google. It was actually one of the only tech stocks that was this red. And, of course, Google, Microsoft, NVIDIA, and AMD are all chip-related, AI-related companies. Amazon, also one of the losers, did well today. And Netflix continuing to pull the market up, still remaining bullish, making new highs. Meta also showing some strength, holding above this 583 level, starting to try to close above 593. Once we close above 593, there should be more room to the upside. But it's holding 590, and it's holding 583. Meta's doing well as well. So now, right? One of the main things also was Tesla was doing really well this morning prior to basically 11. So this morning, heading into the robo-taxi event for basically tomorrow, Tesla was one of the big winners. So Tesla was doing really, really well in the morning. Basically, my point is that these large tech stocks started to pick up some slack. And it was clearly, today it was led by Apple. And it gave a chance for the chips, the real leaders, a chance to breathe. So now, tomorrow, NVIDIA will not be outside of the Bollinger Bands anymore. It will most likely open within the Bollinger Bands, thus giving it more space to run all the way up without it being overextended upwards. Does that make sense? So NVIDIA is going to have more room to go. AMD is also going to have more room to go because it didn't break below 168. So it's still holding 168 support, and it held 169 as well. So there's still more room to go on AMD also. But now the point is, like I said, so now let's just go ahead and take a look at the indices. The IWM has the most bounce potential. Okay, so the IWM can easily break out here, and it could go to 222 if the market is going to be bullish. There's a lot of beaten down IWM related stocks that are just sitting at support. You could see a lot of the setups, they're creating this and they're sitting at a level of support similar to what we were looking at on SQ yesterday. And it's primarily due to the IWM setting up like this as well. So SQ is continuing to rise. We were long SQ, but anyway, the IWM has room to go to the upside. The NASDAQ reclaimed this trend line. The MACD indicator crossed above. But we came and closed right at a level of resistance. So going newly long here is not safe, in my opinion, on the market. And of course, the S&P made a new all-time high as well. So this is also not safe to go long just yet. The MACD just crossed above as well. We were talking about how the MACD was starting to cross above, and because it looked like it wanted to cross above, that things were leaning bullish, and I was explaining how even though we're at a level of resistance here, I had a feeling based off of the MACD and this advanced decline indicator that we were going to bounce. So we started to bounce, and I did say two things. Number one, it didn't make sense to go long, even though I knew there was going to be some more room to the upside. And number two, it didn't make sense to aggressively short because we saw a lot of the bullish indications. So now we're going to have to see how Thursday ends up. So tomorrow morning, we have some important news tomorrow morning. Of course, we also have, tomorrow morning, we have CPI data, we have the AMD event, and we have Tesla. Then Friday morning, we have more news as well. And I'm sticking to this, that if the overall market closes on its highs on Friday into the close, on the SPY, the QQQ, I'm going short. And then Monday, if we gap up again, I'm going short. So we can definitely see this 580, 585 area on the SPY in the next 2 days if the market does want to continue rising. But let's see how things play out. It's all now, Apple was a big winner. We're going to have to see two things tomorrow morning. Which tech stocks are leading and pushing forward? For example, if Apple is going to continue rising, if Apple, Microsoft, Amazon, Meta, Netflix continue to rise, continue to do well, it doesn't matter what NVIDIA and AMD really do unless those are completely red. But if these 5 baskets of stocks don't do well, but AMD and NVIDIA start to do well, then still the overall market can rise. It's just I don't think all of them are going to do exceptional at the same time. So that's the important thing. We have to basically see what the pre-market is showing us with these large tech stocks. And based off of that, we're going to be able to make a decision and trade direction for the rest of the day. Hopefully it becomes easy. Tomorrow generally should be a bit bullish. This is a bullish situation. This is a bullish setup on a lot of these indices and a lot of these stocks. So day trading wise, hopefully we can lean long. But we're going to have to see. So far, so good. I was leaning towards highs this week. We got them. So now let's see what ends up happening towards the end of the week into next week. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I'll see you guys tomorrow. Thank you.